there were two things I wanted to talk to you about. One was the SpaceX IPO, which sort of everyone been talking about. Particularly, I wanted to talk to you in the context of, Steve Eisman.
Big Short.
Yeah, exactly. He's the Big Short guy. So
he's famous now. Same thing with Michael Burry. They gained some notoriety in 2008, and they've been, celebrities in the financial community pretty much ever since.
And maybe even more so now that he's got his own YouTube channel that is doing pretty well, I'd say. And so I watched one of his episodes. I didn't know that. Yeah, and it's pretty good. I mean, I like it. But he had one video up there called the SpaceX IPO, science fiction or serious investment. What do you think his answer is? Science fiction or serious investment?
I don't know. I would lean on him saying science fiction.
Yeah, that's right. Yeah, good instincts. Yep. He went hard, not even leaning. He went hardcore science fiction. This is outrageous. Price to sales ratio is 100x. That valuation is insane, yada, yada. So I thought it would be good to sort of provide, my take on his take, basically. And then that would just help set the framework for sort of a deeper dive into what I think is where the value could be. He could be talking down. I mean, what do you do here, right? Buy low, sell high, So he might just be playing that game. Just be like, oh, this garbage. And then meanwhile, he's on the side, like clicking on with his brokers, like, yo, give me 1,000 shares. Oh, garbage. Don't buy it.
Yeah, people speculate that Michael Burry does the same thing because his whole thing is making a bunch of noise on social media.
Yeah, I resubscribed to the Wall Street Journal. It was giving me a special. One of the first things I saw was some guy, Leaf or something. Apparently he's getting in big trouble for maybe manipulating stock because he would like go on social media and then start like talking up or talking down some stock to all his followers and then just like ride the wave up or down or something like that. Sort of skimmed it, but I mean, just to your point about like, the ability in which social media can go and start to push prices one way or the other. People are going to take advantage of that if they can. I don't think Eisman is doing that. Who knows? At
this level of those guys, are they motivated by making more money or are they motivated by just getting more attention and fame?
I think it's attention. And this kind of occurred to me as I was just digging into his arguments. And I just thought they were kind of garbage. He's smart. It's not like he doesn't know this. So I don't know what he's doing. Maybe it is just about getting clicks or something. The other thing I'll mention is like his video, we're a little bit behind. I mean, his video for this came out like last maybe Friday or something, the last weekly wrap. We're recording on Friday, June 5th. And he probably came out with that episode like at the very end of May. And I think actually like literally like an hour or two before recording this episode, he recorded another SpaceX one he just posted literally 2 hours ago, and I haven't seen it. So we're a little behind, but that notwithstanding. And I wanted to get your take. What do you think? SpaceX IPO.
I mean, to me, like it's classic Elon, just kind of outlandishly large numbers. My favorite was, I forget the term he used, but 28.5 trillion potential market they're tapping into. Do you see that one?
The TAM. Yeah. I saw that.
The number's ridiculous. But at the same time, I'm kind of with it because as a part of the majority of that 28.5, do you remember what the biggest one was? 23?
Enterprise applications for AI. I got my little cheat sheet here. I guess you haven't seen the notes. Yeah, I got it right here. You like that?
Well, last week's episode.
Right. That was right down your alley.
I think that's the future. So like I'm fully on board with that piece. It's easy to say like, oh, it's crazy, these numbers are nonsensical. But at the same time, the long view, everything Elon's done so far is crazy and nonsensical. He doesn't do everything he says he's going to, but the amount that he has done, it's just completely second to none, just objectively. Is this specific investment one of those long-term home runs? I'd like to think so, but are we going to see a major crash in valuation, first couple of years in? I think that's super possible as well. So I'm definitely bullish long-term. Yeah.
Yeah. Not financial advice, by the way. That's in the disclaimer. Okay. This is just two guys and our opinions.
Just two guys.
Neither of whom are stock traders. Okay. But, we try to go into the details here. Hopefully we can present something that is useful to people out
My
there.
view on SpaceX is completely Elon vibes. Don't have any fundamental analysis going on here.
Yeah, maybe now is a good time just to sort of lay out our own biases, which is like I'm arguably a bit of a Elon fanboy. I got some Musk fanboy in me. It's true. Regardless, though, I'm going to just take a look at the Steve Eisman arguments, and we're just kind of going to go through this S1 form and what I thought kind of stood out and try to make the case for and against it. First off, so Steve Eisman, what was his argument? I'm just going to try to summarize it. Maybe I'll throw in a few clips or something, but he says this is science fiction. This is not serious.
Now, I love Star Trek, so I'm all in favor of a Star Trek remake, but not at this valuation.
Everyone's got a price, and if it were low enough, sure, he'd buy it. But it's not, valued at the 1.75 trillion or whatever it was. He looked at, the Q1 2026 revenues. He said that's 4.7 billion annualized, call it 18, 19 billion. This is revenues. And when you start putting that into a certain ratio, the price to sales ratio, then you get these ratios of like 100x, which is, he thinks just insane. And he just compared that to some of the other the highest ones going out at the moment. The Palantir currently operating at a 70x multiple. And he said that's the highest out there. You can find much higher ones, but like not too many at this size. Certainly none of like the really big players are operating at triple digit price to sales. The other thing he did was he looked at the big six companies. So NVIDIA, Google, Apple, Microsoft, Amazon, Broadcom. They have much lower PE ratios, but they're also posted much faster revenue growth. So, if you're a small company, you expect to be growing really fast, but these huge big players are growing faster than SpaceX. So again, good luck trying to justify that valuation.
Just on that metric alone, I like the form they filed with these potential markets. It's like that's, to me, that's really the only story that they have. If you believe in these, they're talking about markets tapping that are 1,000 times bigger than those current yearly revenues. If you can buy that, if you think there's some level of legitimacy to that, it makes the current 100x. In that context, it makes sense. But that's a pretty insane context.
Yeah. Well, maybe let's see. Maybe there's some other metrics we got to look at. So the thing is, I'll say what he's engaging in with the price to sales ratio argument, he's doing a relative valuation. Now, there's like absolute valuation when you try to figure out how valuable a company is, and you try to map out or project all of their cash flows and discount it. He's doing a relative valuation where he takes a ratio and then compares it to other like-minded companies and then sees if it's going to be overvalued or not. Fine. Usually that's done with the PE ratio, price to earnings, not price to revenue or price to sales. The reason why you kind of have to do price to sales, and this is my point, is that earnings was negative, and you can't really, so you can't really, you can't do a price to earnings analysis when you got negative earnings. So I kind of wanted to make that point just if I wanted to buttress his argument here a little bit and show that I'm not like a total crazy Musk fanboy here. Right. Eisman also offered was some explanation as to how he thinks Musk could even think or dream of getting such a valuation. And this is kind of one of the places where he really started to lose me. One of the things he said was you have to trick the NASDAQ to include it in indices.
How did NASDAQ conspire with SpaceX? By changing all the rules for SpaceX to allow it to be included in indices.
NASDAQ 100 index conspired with SpaceX to get SpaceX into that indice faster. Conspire was the word that he used. He thought that was one reason why the valuation would be so high, because it basically forces some of these indices to sort of passively purchase a certain amount necessary. And, instead of kind of normally after an IPO, even very big companies, they're going to have to wait several months before they could be eligible to be included into these indices. There are some other rules that they purportedly changed, although I think I saw something in the news that they changed it back or something. But regardless, this was one of the kind of reasons Eisman said that this is like kind of why he might have such a high valuation. I thought it was kind of, BFD kind of when I heard about it. I mean, what are we talking about here? Like, sure, it might be a little
bit
bit.
of a stretch.
Seems like a stretch, right? The other rationale that he gave was
Musk is reserving 30% of the offering for retail. This is unheard of for a serious company. In the usual IPO, shares are mostly allocated to institutions, and retail receives a pittance.
And he said that, quote, the only way to justify like the valuation is for SpaceX to become a retail cult stock, which I thought was kind of interesting and insulting. Right? If you buy the stock, you're in a cult. You're in a cult. It also sounded
Wall
like
Street bets.
What's that?
Like kind of where the meme stock GameStop thing came from in 2021.
Oh, you think that's what he meant? I don't even know what it means to be a cult stock, I guess, frankly.
Oh, I instantly just thought meme stock, like the Wall Street bets, retail army, those that are buying certain things because they want to, because it's something interesting people are talking about online, because there's a hedge fund they don't like that has a short position in it. Just herd mentality.
Elon might have a cult following. Maybe that's what he means. And it's just like, it doesn't matter. It doesn't matter
Mr.
what
fanboy.
It doesn't matter what the price is. I'll pay it kind of deal. Maybe that's what he means.
The point I'm trying to make is that even if it is memes, people are buying for memes, it's still translated to market cap for GameStop that then allowed them to expand their business more in the past 5 years. So you have something that does make no sense, but you know what? Retail is willing to give them the money effectively. The larger your market cap is, the greater access you have to capital and credit. You can expand your business now just because a bunch of people on Reddit really didn't want you to go out of business. I think you could definitely take Eisman's point that they're leaning on this retail army. I guess my point is like, so what? If people are going to buy it, it is going to increase the market cap. They're going to have, all else equal, more resources to keep building the company. If people want to buy it, go ahead.
So this is why I think he's allocating so much to retail. I think it has something to do with Norway's sovereign wealth fund and his experience at Tesla, and basically how these large institutional investors had leverage over him when they were voting for certain motions for or against the board. I think in one of the years, the Sovereign Wealth Fund voted against sort of ratifying performance-based stock options for Elon Musk. The problem is you get some of these big institutional investors and they start to get captured by some sort of philosophy that does not involve, maximizing the return on shareholders. There are other considerations. And then Tesla's got to like deal with this. Whereas I think it's much more certain if there are certain votes that have to be made by shareholders, if in their hand retail investors like me, that they're going to vote with the board. So like when I heard they wanted to put aside a bunch of it to retail, that was my first thought. But still, I don't think there's no way that 30% retail is what's going to be jacking up the price to sales to 100x. Like he's got to somehow, get us from A to B here. And so far he's got like indices and then retail investors.
He's got two pretty solid points. Does it get to 100x?
Right.
I'm with you there. Not sure.
And the other thing, it's not as though Elon decides what the valuation is. I mean, that's what you're paying these investment banks to come up with.
Yeah, no? But it's
what? No, you don't think so? That's what they're doing. Well, that's why they're getting like a $500 million wind flow or whatever. That was another thing that was in the move. Was like, do you see that? How like people, how Musk or SpaceX or something was going to haggle with the investment banks and say, no, we're not going to pay you 75 basis points on whatever we get from the IPO because that's bullshit, right? Yeah. It's like, we're going to raise for whatever reason. Somehow the investment banks seem to think that if you have a IPO that brings in 50 billion compared to one that brings in like 50 million, all of a sudden you've done like 1,000 times more work. Like 1,000x the work, and it's like
1,000x the value.
You got to imagine that. Yeah, they're sitting there. What are you telling me? You punch in those like last 3 zeros, and all of a sudden it's like, whoa, man, my arm's tired. It's like, sure, it's more complicated, but is it 1,000 times more complicated? You're gonna take the other side.
Almost see that.
You're gonna take the. Really?
It was the biggest IPO of all time. That
Yeah. So what? Is
the
is the
amount.
company that much? Is it 1,000 times more complicated? Are the road shows 1,000 times more difficult? The other thing is it's not 1,000 times. To be fair, it's not 1,000 times because it's like I think smaller ones are it's like 5% or something or like 1%, and they've already got it down to 75 basis points. So there's already a bit of a discount. To be fair, let's call it 500 times.
Yeah, I don't know. I mean, I'm not a ECM banker here, equity capital market banker. I don't know exactly how these deals go, but I just got to imagine just how viciously difficult it is for these bankers to win this business. You're just cranking everything you can in every person that you know to get closer to this deal somehow. And then the deal itself is so incredibly complicated, and you've got rival banks working on it all at the same time as well. And somehow you all have to kind of converge into the same value together, and you're all working independently, and you're all fighting Elon independently. It's just, I just can't even imagine how complex it is. I just think of the armies of analysts out there of 25-year-olds having to make. I wonder how many PowerPoints from start to finish were made about the SpaceX
That's
IPO.
a good metric. Number of slides made about this relative. Is there might be actually to be fair, there might be 1,000 times more slides in this one.
That's what I mean. It's like it could just
or 500.
The number of meetings you have to do. Yeah, it's like I just got to imagine like the amount of like if you're a managing director at an investment bank going through one of these deals, if you're doing a $50 million thing, that's like a rounding error.
And you also get a little bit of like reputation risk. Like if you are, Goldman Sachs or something or Morgan Stanley, sort of coming around to your position a little bit, and you flub this deal, you screw up, you totally miss the valuation. Yeah, that's some serious reputational.
It's a historic event for the bank. Like just
and you royally screwed up.
Like
if it tanks, in the first week, or if it soars after the first week, you're in big trouble.
It's pretty high profile, high stakes stuff. Right. So in that sense, I could see some of it.
I'm coming off my ledge a little bit, all right? I'm less certain now. The other argument that Eisman marshaled forward had to do with bringing forward Palantir and saying that Palantir is the highest. It's working at 76, I think, X price to sales today. What do you think about that? Just even making that as a comparison.
Yeah, I mean, I think it's pretty clear cut by the point. Using any traditional metric to value this company, it's wildly overvalued.
All right. Well, here, look, I pulled some historical ones because I don't think it's fair to compare SpaceX today with anything else out there today. You got to compare to historical numbers. And just to get a sense of it, I put up, the big six, which he had mentioned. I grabbed a couple other ones, Snowflake mainly, and then I have another one I wanted to mention to you. But here's some of the highest, the PE and price to sales ratios that these companies have hit.
I'm not even familiar with Snowflake.
That's a data related one. They sort of go around like Amazon Redshift kind of stuff, and they help manage this whole data systems at big companies. NVIDIA, right? It hit like 219x PE in Q1 2024. I think the highest it hit was, price to sale was 45x. So still, nowhere near that 100x. To Eisman's point, okay? Some of the other ones you'll see like Google, Apple, Broadcom, all of these things hit like 100, 200x in the PE world. But, Amazon hit like these, stratospheric, stupid high PE numbers, like 1200x Amazon hit in 2013 Q3. But that's because that's kind of their business model. They just ran down their earnings down as flat as they could because, Bezos was all about, your profit margin is my opportunity sort of thing. So, they were, grabbing market share and all that. So they ran it down really low. But these are just some of the numbers you can see here. Palantir at the very bottom here, that was the one he wanted to mention as high, having 70x price to sales today. Well, they had 138x price to sales in not too long ago, just about a year ago, middle of 2025. Snowflake, I'm drawing out here because they had a price to sales of 230x in 2021.
Suddenly doesn't look so
Suddenly 100x isn't
outlandish.
Absolutely crazy. Another kind of really interesting one is there is something out right now. It's a pretty big company. I think it's got a total market cap of around 90 billion today. It's got a price to sales ratio of 117x, and it's one of SpaceX's business competitors. Who is it?
A public company?
Yeah.
SpaceX competitor? I don't even know. All I know is Jeff Bezos.
Rocket Lab. You know Rocket Lab?
I
Ever heard of
don't.
Rocket Lab? Out of New Zealand.
Nope.
Yeah, this really brilliant engineer. Yeah, the CEO, Peter Beck, this guy from New Zealand, set up a rocket company. That's a really great story because it just really shows just how important it is to have like a person like that. There's no reason why you would necessarily think, New Zealand would be rocking in the space industry, but it's just got a special person, Peter Beck. Although I think he moved to the U.S. I mean, there's only so much you can do, but I think they're launching rockets off of those islands. Why don't we still just get a little further down and see what's going on with this business? I'll just go through it really quickly. There's this stuff out there already. It's really got three businesses: the space, connectivity, and then AI. And you notice AI is sort of something a little strange. So one of the things they did certainly recently is they changed the mission statement. Here's one thing that I noticed. It's kind of a big deal. I think is really important to have a clear mission. In the past, originally their mission was to make life multiplanetary. But now if you read it, I'll read the whole thing. It's to build the systems and technologies necessary to make life multiplanetary, to understand the true nature of the universe, and to extend the light of consciousness to the stars. Catch that? You sort of left in an area right there for them to just sort of tag on AI. It's like to make life multiplanetary, that's the space part. But then obviously to understand the true nature of the universe, there's AI. We can do it. It's part of our mission.
I mean, arguably you need AI to make life multiplanetary as well.
Hey, there you go.
It just sounds like Elon
you don't even need it.
Consolidating his business interests.
You think that's what it is? I don't know if that's what it is. I think
XAI has not been successful so far. I think by a lot of metrics. That's
which part
putting
of
it onto SpaceX.
Yeah, so let's go through like the first two businesses. So the space business is mainly just the launch business. That was doing about 619 million in revenues for the first 3 months in 2026. But they have a net loss of operations of about 660 million. Most of that's really due to the research and development chunk. Okay, so frankly, by itself, the space business is a profitable business. Okay, but they're putting in a whole bunch of money into developing Starship. Okay, so that's fine. I think it's a good business. Now, obviously, 619 million over one quarter aren't super big numbers, but that sort of leaves room for the next business, which Eisman does admit is a very good one, and that's connectivity. Now that's the Starlink. So Starlink consumer, think those terminals where you can just go in the middle of nowhere and you got really good internet. Enterprise solution. So those are the remote work sites, think John Deere, airlines, cruises, oil platforms now all have really fast internet. Government solutions, that's Starshield. Starlink Mobile, I think is pretty cool. So that's phones. I actually seriously considered switching over to T-Mobile because they had an option to, basically use the Starlink constellation to text from remote regions, which was appealing to me because I occasionally would go hiking. And it's really important to have some sort of form of connection. Right now, my sister does this with a separate device, the separate GPS device that'll ping that she's okay and stuff. It's really important to be able to contact when you go hiking in the White Mountains. I thought it would be why not do this, just have it on your phone so I don't have to buy or pay for a separate device. I ultimately decided against it because it's only eligible in T-Mobile for the top tier, most expensive plan. And I just didn't think it was worth it because I really don't go hiking enough. So I didn't use it, but I think it's pretty cool. Now, the the last part of their business is certainly where this valuation is coming from. Okay. It's the AI chunk of it. You get into this whole, the market is super frothy. These valuations for all these companies are outrageous. We're in the bubble. All the, different companies are certainly looking into the equity markets and trying to cash in right now. Also sort of sounds alarm bells into like, oh man, they know the getting's good right now. So it's like, what does that potentially mean? Google came out, I think raised like, what was it, 80 billion or something in additional shares. I mean, Anthropic's want to get in there, OpenAI, obviously. So, feeling a little like a warm bubble bath, but nevertheless, if you look at their whole AI business, it's really interesting. And it's not something so you heard words like Colossus, macro hard, terafab, and you're like, what, WTF are these things? So like, let's break it down. So they have kind of the XAI portion, that's Colossus and Colossus 2. Those are the AI training clusters. As I understand, this is just raw compute on the ground. Shout out if I'm saying something that's wrong here. Mm-hmm. But like the big thing here is the Anthropic deal, right? So Anthropic was, hungry for some more compute power, and they signed a deal, I guess in May 2026, and they cited this in the S1 form, that they're going to be giving them compute basically, and Anthropic's going to be paying to the tune of 1.25 billion per what?
Per week.
Oh, okay, fine. Not that much. It's per month.
Per month.
Yeah, way to totally overshoot it so that my number doesn't look so impressive. So it'd be like per year or something, and then I could.
Well, you just said.
I think that's pretty good. I wouldn't mind having
just
1.25 billion a month, and that's going to be like through May, 2029. Really? OpenAI is hungry for compute. So, compute's a big deal. The other thing I think that's the most interesting is the terafab. So, do you know what that is? That's the...
No.
Okay, great. That's the chip manufacturing with Tesla and Intel. So that's going to be a collaboration between those two. And I think that's incredibly important. Like if I were to point to kind of one thing that I would be most bullish and excited about, it had to do with bringing that kind of manufacturing off from Taiwan and onto the shores here. And there are a couple other companies that are working on that right now as well, Micron, and they saw their stock price shoot up recently. And I think that is so important because what he said in the S1, and this is the position of SpaceX, it says the future of it, quote, the future of AI will be determined by the control of the physical stack. And he says what that means: chips, data centers, power. And I got to say, that makes a lot of sense to me. All right. And just you get to see about how Elon operates. He just looks into the future. He says, where is the bottleneck going to be? I'm going to invest a shit ton of money into that. And so, with the chips, that's what the terafab is supposed to do. To your point about like Grok and X and stuff, and, maybe not having the greatest model out there at the moment.
In comparison, that stuff almost looks like small peanuts compared to everything that we're talking about here.
Yeah, exactly. The other thing, X is now rolled under Twitter. Who would have thought Twitter would be under SpaceX? But there you go. But I think the way X feeds into all this is it provides real-time information streams to Grok. I think what Musk is trying to do there is maximize signal, minimize noise. So one of the things I've noticed recently is I'm getting a lot of more posts from all these different countries around the world. They decide to just kind of translate them all and then see what you want to see in your feed. And you can sort of see the rationale at that at work, which is just like, how do we maximize like good kind of content? And that's just breaking down sort of the barriers that would sort of limit the flow of information. Another kind of controversial thing that he did along this same vein had to do with getting rid of the block button. Remember that?
Oh, really?
I think so. I think he got rid of the block button a little while ago. I think you can still mute, but like you can't block. Would you want something like that in your brain where like two synapses couldn't talk to each other? It's like, no. Right now you've got, whole countries that speak different languages that can't talk to each other in your brain. That doesn't sound right. So you got to get that down, and then he's blurring it together. So I think that's what's going on there. But it's also going to be a feed for Grok for like real-time information. The other really interesting one, and this is not, maybe you could shed some light on exactly what's going on here. It's the consumer and enterprise applications portion of the AI business. And that's really that's what macro hard is. That's like the collaboration with Tesla. So he's working on an agentic AI platform to emulate digital workflows. Yeah, I think that's getting close.
We were talking about last week.
That's what you were talking about last week, exactly.
That's that 23 trillion market.
Yeah, right. That would quote unquote fundamentally transform how companies are structured and operate. So that's the macro hard.
I could definitely get behind that one.
What are great companies maybe built to do? And it would be, supply things that would be in demand. And another way of putting that is just like attacking the bottleneck. So if we go back to his S1 submission saying that the future of AI will be determined by control of the physical stack, chips, data centers, energy. Well, let's just look at that, right? So chips, that's a real bottleneck, and that's setting up the terafab. So check there. Data centers, right? He wants to put these things in orbit, in orbit around Earth. And the energy part as well, space. You're going to have as much energy as you could ever want. So of those three things, it's sort of like the main bottleneck or the question mark has to do with, well, how do you get those data centers into orbit? And so that's why the number one risk also that's listed in that S1 form is Starship. The most important thing, Starship, exactly. That's what they write. It's like delays in Starship development is like our number one risk. Because just like the space portion of their business enables their connectivity business. The only reason connectivity is possible is because of their space business. And it follows from that. The only way this AI business is going to be possible is if they get Starship up and running. Second one is regulatory risk, the ones that they mentioned. It's like delays or difficulties in getting licenses for FAA launches, right? Licenses for communication and spectrum authorizations, right? Legal. So they're worried about AI products and X platform and stuff. And, all that is subject to laws and regulation. I mean, they seem to be positioning themselves really, really well.
Yeah. I mean, you own the rockets. There's not many companies, not no one else can do this, or governments that can do it. Yeah.
No one else can do this. So you don't need, the other thing they mentioned is you don't need all the special construction and permitting associated with trying to build a data center on the ground. And obviously power is like a huge problem that they've been talking about, all solved. Just stick it up in space.
All dependent on getting that Starship up, which, by the way, so they've done test launches for Starship now.
Oh man, those are so cool.
They've been having some issues,
that fires
right?
me up, man. I love those things.
Really? But hasn't it failed like 4 or 5 times in a row?
It's supposed to fail. Yeah. No, that's just part of the process. That's just the developmental process.
Well,
the point is, is it possible? And I think the answer is a resounding yes. But they're definitely working out, some of the kinks.
I'm totally with you, though. Yeah, you have to do this iteratively. But I thought also over the past few years now, it's been delayed time after time as well.
Yeah, I mean, if you listen to him when he makes predictions,
I thought there was a lot of delays.
Yeah,
good point.
He's always best case, it's this. But I think and just the way he operates is he always makes optimistic timelines because it's one of those aim for the moon, you'll land among the stars sort of deal. No pun intended here. I've got no problem.
Okay.
Just the fact that he's able to demonstrate that spot, the fact that they landed on that chopstick is crazy. Right. And the fact that they as soon as they sent Starship around the planet and had it enter, when they were starting to remove good chunks of the heat shield, and it still landed, you're like, oh, this is, you can see the light at the end of the tunnel here. It's this thing is sound. It's a proof of concept. It's sound, but it's just now a matter of walking through the reliability a little bit.
Got it. Just this past week, Blue Origin, this massive explosion. This stuff is just viciously difficult.
It happens. All right, man, we've been talking about this for over an hour. That's kind of my take. It's would I buy it at 135? Yeah. I'm like a buy and hold kind of guy.
Yeah, I'd buy and hold. I don't know how it's going to do in 2 or 5 years. Hopefully good, but
the other thing,
10 or 20?
Getting kind of to one of those retail investor mindsets, which is also you just kind of want to support the attempt. I just love the mission and all that. And this is definitely harking on Eisman's criticism, which is you just put aside a bunch of retailer, people like me will just pay whatever just to kind of be a part of it. because it's just so exciting, which it is. So it's like, all right, maybe they have more of a point there.
Public markets, that's what it's all about.
That's what it's at for. Yeah. I mean, why not? Why not? Of course you can sell it to whoever pays the most. Why does it have to be earmarked for these, big investors? F that. So who's going to pay the most for it? Even if they're all suckers at the end of the day, which is what I think that, but again, last comment I'll say, Eisman's totally right. Don't buy it. No one line up at the IPO. I hope I'm the only one in line. And I buy it. No one buys it for 135. It goes down to 50. And I'm like, oh man, I guess I'll, grudgingly. Yeah. What do you think about that, Joe?
I'm with you on that.
All right.
bring down that price of sales.
Too long ago, Jaime Dimon, known for speaking out a little bit, saying his mind. He had that like he's full of shit comment.
Protecting the whole industry.
Full of shit.
Well,
did you follow that?
I'm actually behind the times here.
Oh, great. Okay, perfect. So there was an interview with Fox Business, and the he in that statement had to do with Brian Armstrong. So Brian Armstrong runs Coinbase. That's one of these crypto firms. And then the he's full of shit comment was in response to the interviewer basically suggesting that Armstrong is going out there, and Armstrong said that he's representing like the whole banking industry. And Jaime Dimon is like, no, he's full of shit. And like Jaime Dimon is sort of trying to say two things going on here. One is he's arguing that cryptocurrencies, if they are acting like a bank and they're taking deposits like a bank, then they should be regulated like a bank, Joe. Right? That's number one. I think we've heard things like this as kind of the go-to playbook, I would say, for banks that are trying to defend their territory. This is exactly what their moat looks like. It's like regulate them the way you regulate us, because they know that's super expensive. That's just a huge amount of overhead. The thing that he said was that stablecoins, or like these stablecoins, he said, called out specifically, we're going to be able to get interest just the way that the rule is currently written. And they were talking about the Clarity Act that was coming up. And actually it just left committee just like a couple days ago. And it's, kind of being scheduled to be put forth on the floor. That doesn't mean it couldn't potentially change a little more, but Jaime Dimon said we are not going to accept it as it's currently written. Just off the bat, what's your take?
If they're taking deposits, paying interest on it, that's what funds banks. That's the business model. In what way? Like, it seems like those stablecoin issuers under that scenario, they're acting functionally an awful lot like banks. I'm with Jaime Dimon on that one.
Ooh. All right. Well, let me say
it's because it's not paying interest is a pretty sweet deal for the stablecoin issuers, because you're just getting 4% just free money. That's just insanity.
Yeah, it's wild. I mean, the stablecoin companies are just printing money. We talked about this earlier with Tether just being insanely profitable. But when you're kind of listening to Jaime Dimon talk about this, my face sort of scrunched up, specifically around this notion of the stablecoin and Clarity, and how they're not happy with the Clarity Act because it allows interest payments to be with stablecoin. The thing is, Stablecoin Act is already in the books. It passed a year ago. It was called the Genius Act. And it passed, and it already talked about stablecoins. And it set up the regulatory framework for stablecoins. Another thing that Jaime Dimon said was that, this current act doesn't do anything for, BSA AML, right? It doesn't, we've got all these liquidity requirements. We've got these capital requirements. Well, it's like, you look at the Genius Act, and they absolutely do have capital requirements. They have liquidity requirements, and they have BSA AML requirements. So WTF is Jaime talking about?
It's full of shit.
That was my reaction. And we did a whole episode before on the Genius Act, and we looked at it. And I even went so far, I remember this, because I even said at that point, is I think the BSA AML like rules in there for stablecoins is going to kill stablecoins. And that's sort of one of the things I said, because they're so stringent. There's even a line in the Genius Act today. It's treatment under the Bank Secrecy Act and sanctioned laws. This is the Genius Act in relation to stablecoins. It says a permitted payment stablecoin issuer shall be treated as a financial institution for purposes of the Bank Secrecy Act, and as such shall be subject to all federal laws applicable, blah, blah, blah. And then it says including, and it lists out a bunch of things that the stablecoin provider has to be able to do. They need to retain appropriate records. They need to monitor and report any suspicious transactions relevant to a possible violation of laws and regulation. They need technical capabilities, policy, and procedures to block, freeze, and reject specific or impermissible transactions that violate federal or state laws, rules, or regulations. That's huge. I don't even know how you technically do that. So for Jaime Dimon to get up there and say like there aren't any, BSA AML is nothing. I think he used the word like it's not in there in the same sentence or in the same discussion as like stablecoins is like ridiculous. The other thing I would even push back with Jamie when he says that there's like liquidity requirements for stablecoins, I would say, all right, why don't you take the same liquidity requirements for JP Morgan as stablecoins have for their banks? And he would balk and he would say that's impossible. Well, there's no way we could keep up with the liquidity requirements that stablecoin companies need to keep up with. Remember, they have to hold all of their assets in super short-term, super liquid stuff. If you said, all right, Jamie, fine. Well, how about you just have the same liquidity requirements as stablecoin companies? JP Morgan would be done because they couldn't issue loans. The whole credit business would be gone. And they would just sell all their loans and they would just turn them into cash, reserves at the FRB, short-term treasuries, repo. Like that's it. Which obviously isn't the case. I mean, that's silly. But like if we wanted to give Jamie a little more credit here with regards specifically to the Clarity Act, and that encompasses all these other digital assets, right? Then he's got certainly more of a point. I might have to kind of table this because I haven't taken a close look at the actual language in the bill that came out just like a couple days ago with regard to the whole thing about stablecoins not being issued interest. That's sort of an interesting saga because what happened there, really what's going on is the Genius Act wrote very clearly, but I guess not clearly enough for the liking of banks, that interest on stablecoins is prohibited. This is what the Genius Act said. It said, prohibition on interest. No permitted payment stablecoin issuer or foreign payment stablecoin issuer shall pay the holder of any payment stablecoin any form of interest or yield, and then in parentheses, whether in cash, tokens, or other consideration, end parentheses, solely in connection with the holding, use, or retention of such payment stablecoin. And the banks have come back and they wrote a letter about a month ago, and they wrote it to Tim Scott, of course, and Elizabeth Warren, and they outlined their concerns, which, it's all about undermining the whole business model of the commercial banking system, right? Credit and all that stuff. They said that the way the Genius Act is written now, there are some loopholes. So you could like pay a stablecoin holder a flat amount monthly that increases as balance increases. I mean, maybe. And they kind of call that, be like, it's kind of like interest. Stuff like that. So what they did, and in the same letter to their credit, they just lawyered this up and they gave them exactly the language that they want to see changed from the Genius Act. And that's going to be changed by the Clarity Act. So the only thing Clarity Act is doing is going in and changing that single line from the Genius Act. And then they, provide the language itself. And like, it's super just lawyered up. They change some words around. They remove some other ones to make it just more broad and just kind of more airtight and all that. So like, mainly they wanted to get rid of the original language of like, quote, economically or functionally equivalent to like interest or yield, and change it to substantially similar to the manner in which banking organizations pay interest or yield, whatever. So let's just say short, this is just more airtight, whatever. Well, I did take a peek at the law that currently got passed out into the Senate, and who won?
The banks.
No, actually, I think the stablecoin one. I looked at it briefly, but it doesn't have these changes. They kept like the economically or functionally equivalent language in there. So we'll see what happens. But Jamie Dimon's not going to be too happy about that. And like this has just been like a whole saga too with the administration. So like Trump is pushing it on, or had been pushing for, the Clarity Act to get out there on truth. You got Bessent is writing articles in the Wall Street Journal saying like how we got to get this done. People in the administration, Patrick Witt has been busy on X, kind of telling off banks and stuff and talking about different compromises. And the White House Council of Economic Advisors, they released a report that was sort of downplaying the risk of deposit flight from stablecoin yields. I mean, the administration is doing what it can to get this Clarity Act out the door. Certainly they want to do it before the midterms. Patrick Witt had somewhat of a spicy X post a little while back where it talked about the compromise reached by Senator Tillis and also Brooks. So that's the one about stablecoin yield. And just trying to change the language around there to say like, yes, it can't be interest, but you can use it as rewards if you use stablecoins. So like if you use a bunch of stablecoins, you can earn some stablecoins in return. It's not interest. So that's the compromise. And then, Patrick Witt comes out and says it's hard to explain why further lobbying by banks on this issue is motivated by anything other than greed or ignorance. Move on. That's what he wrote. Getting a little spicy. He even went so far as to say like, I specifically requested the attendance. This was May 11th. This was about a month ago. Again, a couple more months go by. This thing isn't moving forward. Patrick Witt gets on X and responds to someone and says, I specifically requested the attendance of Mr. Nichols and other bank trade CEOs at the meeting we hosted back in February to resolve the stablecoin reward yield issue. They refused. I guess the White House was beneath them.
Passive aggressive there.
Yeah, a little bit. Right. Definitely this tone has gotten kind of more and more pissy.
Catty.
A little more catty. In their defense, I wouldn't want to have to defend their position in public either. And like
me.
And then you got Jamie Dimon saying like, oh, he's full of shit and stuff.
He's full of shit.
And then saying stuff that about stablecoins that I don't think really resonate. I think in that interview, my take is just that he's being a good soldier for the banking industry as he is supposed to, as a CEO of a major bank. But I'm not like, I don't even own any stablecoin. I'm not invested in it, just to be forthcoming. I'm not I'm not a crypto guy or anything like that. I'm just trying to kind of get an understanding of this stuff because I know it's a big deal for the financial world. Anyway, man, that's all I had for you today, Joe.
Cool.
This has been another episode of the Root of All Evil podcast. My name is Luke.
My name's Joe.
And we'll see you next week. Thanks for tuning in. All right. Bye.